Okay, so last Friday, in a Manhattan district court, the largest class action lawsuit in cryptocurrency market history was filed on behalf of investors who participated in ICOs of projects like EOS, Tron, BNT, Civic, Kyber Network, QuantStamp, SNT, Status Network Token. So quite a bunch. And in this kind of series of class action lawsuits, attorneys who wish to represent the plaintiffs in a series of class action suits rather than just doing individual suits for each individual plaintiff, which includes damages by exchanges such as Binance, Bitbox, Bitmex, and Kucoin. So not just the ICO purveyors or providers of the ICOs or the startup companies themselves, the ones who actually got the funds, but also the exchanges involved as intermediaries. Now, the law firm's lead attorney here is Kyle Roche. All right. So targets of the lawsuits include Binance, Bitbox, Bitmex, Kucoin. Here are the digital token issuers targeted as well. Block 1, i.e. EOS, Tron, Bancor, Civics, Kybercoin, QuantStamp, Status. Now, he spoke to Decrypt, where we are getting part of the information from this article. So I want you to keep that in mind as we go over this article, that this is certainly biased toward the plaintiffs and certainly biased against the exchanges. But he describes these particular ICOs as egregious examples of the selling of unregistered securities in the United States of America, which is always the big thing, right? Are these tokens unregistered securities? This meme has gone back as old as time, right? Generally concerning Ripple. As we all know, Bitcoin and Ethereum are proclaimed to not be securities because they are sufficiently decentralized, whereas Ripple, it's, right? We don't know. Now, Kyle does, he contends that the defendants, which would be, obviously, as we've talked about, exploited billions of dollars from investors during the 2017 through 2018 ICO mania, describing it as a form, or as a fraud, that is, of historic proportions, historic nature. So in that sense, these lawsuits were, in fact, in his opinion, long overdue. This, in my opinion, though, it's not so much that they were long overdue. It's that this is generally what is inevitable after a situation where anything like this, like if we look at the $1 trillion lawsuit that's being levied against Bitfinex, it will always come after the fact. Individuals will always come out, whether the lawsuits are frivolous or not, or whether they settle or not. We do have to understand kind of the business nature of the legal system in the United States of America. Whenever there is lots of money exchanging hands, there is lots of opportunities for lawyers to make a lot of money. What's really interesting, there's a really good documentary about how the legal system worked in Rome on YouTube. I recommend you guys watch that. I think you just probably search for legal system in Rome documentary. In the kind of first era of attorneys in Rome, it was not necessarily those who just had their facts correct or just did the best research. It was those who had the most convincing arguments, right? So, this is how individuals like Cicero and them made their name, right? Making very, very convincing and compelling arguments to the public, to the commons, who used to weigh in on the legal system. But that history lesson aside, the legal system in the United States has become so complex that, anybody who's read some John Grisham knows that class action lawsuits particularly, represent this inward cycle of money grabbing opportunities for attorneys, right? Anytime there's something big or anytime a huge corporation or a big company, has done something in error, guaranteed if you were a patron of that company, if you bought products and services from them, you're going to get a phone call saying, hey, would you like to sign up for this class action lawsuit? I'm going to make millions. You're going to get a check for $42. In fact, all the plaintiffs, the people who are actually hurt, are going to get a check for about $42. Meanwhile, myself, the attorney, I'm going to get 50% of the settlement because I'm going to take your case on a pro rata basis, meaning I don't get paid unless we win something. But if we do win, I'm going to get a lot paid and you're going to get a little paid, right? That's how the class action lawsuit system tends to work. So I'm not really, I don't really think this is any different. I don't really have a high opinion. Now, again, I'm not really speaking to whether or not investors were defrauded, right? In general, I tend to think that there were a lot of individuals that made money in cryptocurrency in 2017, 2018, assuredly. And I'm sure that there were a lot of individuals who purchased things that they shouldn't at times that they shouldn't because they didn't have experience in trading or investing in general anyways. But it's not that they necessarily got burned in crypto. They would have got burned trading the stock market, right? They would have just bought back in January, right? They would have bought the local top of traditional markets and they would be mad and trying to sue the New York Stock Exchange, right? So the only difference is that there's not a class action attorney, this kind of paper train running around signing people up to file a class action lawsuit against the New York Stock Exchange or ARCA. But just wait. Maybe if the market drops far enough. They just might. So anyways, I want to be very, very clear about that, about the financial incentive for A, who is speaking to these reporters who we are partially reporting about, and two, the financial incentive, obviously, of the counsel for the plaintiffs here in the first place, right? So moving on from that, many legal experts and even the SEC has weighed in on the phenomenon of initial token offerings, right? Or initial coin offerings, right? They were initial coin offerings. Now they're ITOs, right? Maybe it's a more politically correct term nowadays. Like, we can't say ICOs. We can't say initial coin offerings. It's ITOs now. Anyways, again, the SEC have deemed most ICO projects as illegal securities offerings, right? And my very strong opinion that yes, certainly the SEC and governmental bodies like that do help regulate some fraud, but they also create a system in which legalized fraud can easily be done, right? It just depends on where you are in the hierarchy of scams. Now, the critics, of course, have been saying for years that these companies skirt U.S. federal and state securities laws and that they operate in a legal gray zone while getting rich doing it. So we can talk about probably the most frivolous lawsuit that's going on right now. And again, listen, I am very, very, very outspoken about my criticism about Bitfinex. You guys can go see my video, The Truth About Bitfinex and Tether FUD, explained by a professional trader, where I actually break down exactly where Bitfinex went wrong. The idea that Bitfinex manipulated the run up and the run down based on Tether is pretty nonsensical, right? Go read Reminiscence of a Stock Operator. It's a fantastic book. And the biggest takeaway that you can get from that is you cannot, it doesn't matter who you are, cannot manipulate an entire market, doesn't matter how much money you have, in the direction that it doesn't want to go. Whales cannot move, like whales can move the market, right? You see a big wick, you're like, oh, maybe a whale did that. That's a fat finger. You do not move price from 3,000 to 12,000. Whales cannot do that, right? You cannot manipulate a market in the direction that it doesn't want to go. You need retail investors, just like why does Wall Street pick the pockets of Main Street? That's the target, right? They need to move the money from the pockets of retail investors into the pockets of institutional investors. That's how the game works. It's traditionally how markets work, right? Or the concept around traditional markets, which is why we spend so much time here advocating why we do not trade like retail traders. We do everything that we can to put the statistics in our favor to trade, and not just like professionals, right? Because they trade their own strategies. You have to trade a strategic, rules-based system. That is the best way to ensure success, right? If you just, follow the news or, buy like other individuals buy, you're going to have the same, generally the same results as other individuals, right? So the Roche law firm is also working with another New York law firm, and that's Selendi and Gay, who was behind and is behind the legal action brought against Bitfinex back in January in their Tether market manipulation suit, which is again a pretty frivolous lawsuit to attempt to sue Bitfinex for I think they're trying to claim like $1 trillion. And the idea that Bitfinex is responsible for the entire run-up via the Tether treasury is ridiculous. But while there are material differences in each claim against, each token platform or exchange, for example, what they all have in common, according to Roche in their original claim, getting back over here to the real article that we're talking about, what they really have in common is that all of them, according to Roche, solicited United States citizens to buy unregistered securities as well as sell them inside the United States, which, is kind of the linchpin, right? Now, what was noted is that all of the tokens identified in these complaints are ERC20 tokens, which is to say Ethereum tokens, which allowed these projects to easily build and distribute these newly minted digital shares. The ERC20 token standard also made it easier for exchanges to onboard users to their platforms and begin listing and trading these tokens, right? And offering them in a very readily available fashion. And as Roche characterized it, the proliferation of ERC20 tokens allowed the 42 defendants named in the lawsuits to take advantage of investors to the tune of billions of dollars. And on top of that, the defendants exploited investors' enthusiasm concerning more legitimate projects like Bitcoin and Ethereum was responsible for luring in people who didn't fully understand the technology that they were investing in, is their claim, which is certainly true, right? I've talked to so many individuals, for example, who who are in the space and like me are passionate about decentralization, are passionate about Bitcoin, really enjoy the mantra, the ethos of decentralization. They want to see the world a better place. They believe that decentralized cryptocurrencies can get us there, that projects like Bitcoin can get us there, that hard money and sound money can get us there, that modern monetary theory is not going to work, that the debt actually matters, that the debt actually does come paid, especially when you have this, kind of worldwide situation. When you have worldwide economies, when you don't have one world government. I think MMT would work great if there was a one world government, but I want to do everything in my power to push us away from that, right? Some people think that the futuristic, human civilization of Star Trek looks awesome. I love Star Trek, but that civilization terrifies me, right? One world government terrifies me, as it should. I think most people, because I don't think they understand what they give up, right? Human freedom and liberty necessarily implies more decentralization. Now, but that is true, right? I have mentored so many individuals in one-on-one mentoring when it comes to, hey, can you take a look at my portfolio, right? What do you think I should do about these, right? I bought these, I bought a lot of these altcoins when price was really high back in 2017 or early 2018, and I'm just holding them, right? I've just held them all the way down. What do you think I should do? And what's obviously that's going to depend. That depends. Every situation is different. Every individual, it depends on their confidence, what their time horizon is, what their actual faith in these projects are, what their current demands on capitalization are, but regardless of what the answers to those questions are, it's almost 100% of the time, those same individuals are still extremely passionate about cryptocurrency and the ethos of why they're here and the mission statement and making the world a better place and and dissolving the Fed, auditing the Fed, all of this stuff, and it's really cool because you bring together cypherpunks, you bring together libertarians, you bring together socialists. I mean, you bring together all sorts of different people from different walks of life that can't agree on one thing, and that is that hard money is the path forward, and that Bitcoin represents the greatest form of sound hard money that we could possibly have, and that will allow us to have a much better future and economy for everybody, regardless of what economic system we incorporate or subscribe to, or what sort of governance system that we subscribe to, right? And what's really interesting, this concept comes from, I'm a big, good, friend of the show, Ansel Linder over at Bitcoin and Markets. Go check out the interview with him if you haven't watched that. In one of his latest episodes, he talks about this idea that, that with a more efficient monetary system like Bitcoin, what we have the potential to have is a new renaissance, right? Where all of the time and energy that is being consumed right now by, governments and central banks and individual investors and hedge funds and professionals and legal systems and everything, all of the energy, which is all based off human time, right? At the end of the day, the most precious commodity from our perspective is time. It is finite. Every individual only has a certain amount, and it is infinitely powerful because human innovation, human intelligence has given us everything on this planet. It has allowed us to build planes, trains, cars, automobiles, guns, machines, potentially artificial intelligence, Bitcoin itself, fractional reserve lending, skyscrapers, human intelligence and intuition and human consciousness has built all of that. And all of that stuff obviously requires consciousness and to be alive to do that. So at the end of the day, human time is the most precious resource, and doing anything that we can to preserve time. And this is why, if, for example, you look at the stuff that I talk about, if you look at what CEOs talk about, if you look at what the most successful humans talk about, what is most fundamental to their success, generally it will be something along the lines of time management, efficiency, and discipline. Because at the end of the day, your capital is your time and your intelligence. That is your capital. That is the most valuable asset that you have to offer to other individuals, to potential partners, and to the marketplace. That is your most valuable asset that you have to offer, is your human capital. The renaissance that we can have by taking all the time that is put into trying to keep together a patched together, shoddy, unsustainable monetary system. And if we adopt a hard money system like Bitcoin, all of that time and energy can go into producing actual goods and services and value for human individuals and improve the quality of life for men and women on the face of the planet, right? So Obviously, the idea that individuals were misled into thinking that they were purchasing a decentralized cryptocurrency without actually being aware if it was, in fact, decentralized cryptocurrency or a security created through a centralized process is something that we've talked about here a whole lot. And, of course, some of those investors lost a lot of money. Some made a lot of money, right? So where does the blame lie on? Does it lie on the exchanges? Does it lie on the token offering? Does it rely on the individual investor, right? Is it the offering company's fault that their project failed or maybe sucked to begin with? Now, this article does go on to present United States-based exchanges such as Coinbase and Gemini as not getting tangled up in this drama thanks to their rigorous compliance and regulatory departments, which ensure that they comply with federal and state laws. So again, so that's a good plug for Coinbase there. If you guys want an exchange that you could pretty reliably and safely trade on, it's Coinbase. Oh man. Anyways, but it also pours on the blame. This article and this lawsuit, it pours on the blame for the exchanges named in the complaints, right? Accusing them of making fortunes on the trading fees as well as allegations of extravagant listing fees. And of course, we know the listing fees happen. Binance receives large cash payments from token issuers seeking to list tokens. This complaint asserts that they're in excess of $1 million per listing. And again, we've got good, we've talked about that for a while. We've got good evidence that about $1 million per listing is about the standard for Binance, right? That's what's charged by the Binance exchange to list projects in the first place. And that's probably gone up. Now, these individuals, the law firm here, do insist that they are strong believers in crypto and blockchain technology, but fundraising for these projects must be done in a way that respects the regulatory rules. By the way, if you guys get a chance, make sure to go check out this Medium article. If you follow through this link on the Bitcoinist, it will guide you to this Medium article about why Andreas endorsing the law firm pursuing the $1 trillion case against Bitfinex is a problem. It's a pretty well thought out article, I think, in the end. It's a pretty well thought out article. So, the question is, how do you guys feel about this lawsuit? How do you guys feel about this topic in the first place? If we look at some of the tokens named in this complaint, we can see that they saw a major run up in 2017 and early 2018 before crashing, most of them more than 90% for the great crypto winter. Now, many investors walked away feeling burned. And if you're among them, be sure to leave a comment down below.